Welcome to Money Mode, the channel that makes money talk less confusing and way more useful. Let's get into it. Bitcoin. You have heard the name everywhere. Maybe a friend bought some and doubled their money in a month. Maybe another friend lost half their savings in a single week. So what is this thing, really? And why does its price swing like nothing else in modern finance? Let us start simple. Bitcoin is a digital currency. It is not printed by any government, and it is not controlled by any bank. Instead, it lives on something called a blockchain, a giant shared ledger copied across thousands of computers around the world. Every transaction ever made is recorded there, permanently, for anyone to check. Think of it like a public notebook that nobody owns but everybody can read. When you send Bitcoin to someone, that transaction gets verified by a global network of computers called miners, then locked into the chain forever. No single company, no single country, no single person can rewrite it. This design was created in 2009 by a mysterious figure known only as Satoshi Nakamoto. To this day, nobody knows who that really is. The idea was radical. Money that belongs to no government, that cannot be printed endlessly, and that anyone with an internet connection can use. There will only ever be 21 million bitcoins. That number is fixed in the code itself. Compare that to regular currencies, which central banks can create more of whenever they choose. This built-in scarcity is one reason people call Bitcoin digital gold. Now here's the part everyone notices: the price. Bitcoin has soared past $60,000, then crashed below $20,000, then climbed again to new highs. In a single day, it can move more than many stocks move in an entire year. Why does this happen? First, Bitcoin has no earnings report, no factory, no product you can hold. Traditional companies get valued using profits and assets. Bitcoin is valued almost entirely on belief, on what people expect it to be worth tomorrow. When belief shifts fast, price shifts fast. Second, the market never sleeps. Stock exchanges close on weekends and holidays. Bitcoin trades every second of every day, all year round. That means news can hit at 3 in the morning and the price reacts instantly, with far fewer buyers and sellers around to soften the impact. Third, a relatively small pool of money controls a large slice of the coins. When a handful of large holders, sometimes called whales, decide to buy or sell in size, the price can lurch dramatically because the market is thinner than most people assume. Fourth, emotion drives crypto harder than almost any other asset. Fear of missing out pushes people to buy at the top. Panic pushes people to sell at the bottom. Social media amplifies both feelings within minutes, turning a dip into a crash or a rally into a mania. Fifth, regulation is still evolving. A single announcement from a government about banning or approving Bitcoin products can send shockwaves through the entire market because the rules of the game are still being written in real time across different countries. There is also a technical rhythm baked into Bitcoin called the halving. Roughly every 4 years, the reward given to miners for confirming transactions is cut in half. This slows down the creation of new coins over time. Historically, the months following a halving have often lined up with major price rallies, though nobody can guarantee that pattern will repeat forever. Bitcoin is also still young compared to stocks, bonds, or gold, which have traded for centuries. A market this new, with this much attention and this little history, naturally experiences wilder price discovery. So, is Bitcoin worth the ride? That depends entirely on your goals and your tolerance for risk. Some see it as a long-term store of value, a hedge against inflation and currency devaluation. Others see it purely as a speculative bet, no different from gambling on a fast-moving stock. What almost every serious voice agrees on is this: never invest money you cannot afford to lose. Bitcoin can swing 30% in either direction within days. If that kind of movement would keep you awake at night, it may not belong in your portfolio at all, or only in a very small amount. Understanding the technology helps you make a clearer decision. Bitcoin is not magic internet money with no logic behind it. It is a scarce, decentralized, always trading asset, and every one of those traits explains why its price behaves so differently from stocks or bonds. This video is for educational purposes only, and is not financial advice. Always research thoroughly and consider speaking with a licensed financial advisor before making any investment decision. If this helped you understand Bitcoin a little better, hit like. Subscribe for more clear and honest finance explainers.